Scott, it's great to have you with us. Let's talk about the cliff edge scenario. Back in play for Brexit, the pound seems a bit concerned.
Unbelievable. Unbelievable. We talked about this a couple days ago, the nice rally that we saw on the pound based on, the results last week. And then all of a sudden, at the drop of a hat here, all of a sudden there's risk on again to what sort of Brexit this is going to be. And you're seeing, some weakness in the pound. It seems like this is going to get done, Ben. I think that, and we talked about this, that run up that we saw in the pound to, I don't know, what it was like the 134-ish level was probably overdone a little bit. This pullback then is really not that surprising. However, when is this thing going to end? When is something final really final? I guess not until Brexit really happens, which at this point maybe it's back on the table again.
Yeah, it sure seems in terms of price activity is expressing concerns along those lines. Let's talk about what this means for the dollar, because it came under fire this week with the British pound up into the mid 135 handle, but it was also the 6C, the Canadian dollar, the Mexican peso. We're talking multiple currencies on the move higher. You can see the dollar took out that 97 level, Scott.
Yeah, it did, after dropping down into the low 96s, and it looked at that point like it was probably just a temporary pullback, and that the dollar was going to rally a little bit, and I think it will sustain itself right around this 97 level. But you're right, it took that out. It's trading 97.03 right now, and you know what? I think that as we spoke about, any pullback in the dollar has to be bought.
Yeah, Scott, I keep thinking along those lines. It reminds me of that old Chuck E. Cheese game, the whack-a-mole, the dollar. I mean, you can beat it down, but it keeps coming back this year. I wonder if we're in for a similar situation. Obviously, the breach at 97 was concerning for the bulls, but I mean, Scott, if we could resume the trend, it certainly has been this year to see pullbacks, new highs for the year, pullbacks, and I guess at this point we have potential to see that if we can continue to rally off this recent low.
Yeah, no doubt about it. I don't think we're going to reach back into that 98 handle, around the corner, but it's certainly not out of the question. I would definitely look at the 98 handle much before I revisit those lows that we saw just earlier in the week and end of last week.
Scott, let's talk a little bit about the safe haven currencies. We're talking about the Swiss, talking the yen. Those tend to be the two major focal points when we head down this path. But what's interesting is the yen's been coming off a little bit with the indices into new all-time highs, but the Swiss franc certainly has, and it's been rallying and weighing on the U.S. dollar. Here we have the yen. You can see it, for the most part, again, has been coming off those highs that we saw earlier in the year. But Scott, I'm wondering what's behind the bid that we've been seeing in the Swiss, do you think?
I think it's a little bit of a catch-up, actually. It has lagged the yen. It has lagged the dollar for better part of the entire year. So I think there's a little bit of catch-up here. What really has, front and center of note for me, Ben, is the New Zealand dollar.
Yeah.
Look at what happened versus the pound, especially over the last couple days when we got some cautious play on the pound. The New Zealand dollar has really rallied. There's a pretty decent direct correlation with the pound and the New Zealand dollar. They just came out with some really good numbers overnight. They have a growth report coming tomorrow, and that's been one of the risk plays here that I think is really noteworthy to watch.
Yeah, Scott, this was going to be my next question to you, actually. You kind of took the words out of my mouth here, because we've got a nice trend line which we just tested. There's some key resistance right around that 6,600 level. And then also the optimism tied to U.S.-China trade benefits the 6A and the 6N, the Aussie dollar and New Zealand dollar, in terms of overall economic conditions and their location and proximity to China and Asia.
A lot of tailwinds there, and I wouldn't doubt if we see a continued rally there. So kind of the perfect storm right now for the New Zealand and like you just said, the Aussie dollar.
All right, let's talk about numbers this week, because a kind of a light week. We're headed into the holiday abbreviated week next week, but we still have GDP, and I think the biggest focal point, personal income and spending. Scott, we're still focused on wages. The Fed is. We should be as well. What are you going to be dialed in on as we head into the end of the week?
Yeah, no doubt about it. The spending numbers is going to be huge. Are we going to get any glimpse into how the consumer has fared this holiday season? We won't get final reports until maybe next week or just shortly thereafter. But what's that inside look going to be? And if the numbers are strong, Ben, if the consumer is still really hanging in there and showing a powerful holiday season here, no reason why the market won't look at that as a huge positive.
Scott, final question beyond this week. As we head into the holiday session, what do you tell your traders and what would you tell our viewers in terms of participation, what they can expect next week, and how aggressive they should be?
This is really hard to fight this momentum, really hard to fight the rally in the marketplace. Now, we all know that volumes are going to start tapering off a little bit, which could make, market trade a little bit more sensitive, a little bit more volatile just because of less volume, but really hard to fight this trend. What I'm telling my traders and what I'm telling, my clients here, stay in the marketplace, but buy that cheap protection when you have the opportunity.